Alan, boohoo.com. It's not an investor lament, it's actually the name of a company, a UK online retailer which is listing on the London market quite soon. Mm-hmm. Now, I covered AO World recently, so I'm a bit skeptical. Yeah. I'm saying boo to this goose. Are you a who?
Well, let's put it in perspective. The company has a different model, certainly than AO.com. First of all, we're talking about clothing and not white goods. Second of all, while they don't make their own stuff, they sell own brand clothing, and in that way they capture more of the margin than even ASOS. They're not selling other people's brands.
So what are the margin numbers here? Do we have?
The gross margin looks like it's going to come out in the area around 60% trailing, and should hold around there, may dip a bit. But compare that to ASOS in around 50. So, that's the real comparison, and probably will get some attention.
Okay, well, call me old-fashioned here, but I kind of want more info on the real-world aspect of this business, behind this kind of online IPO. So you mentioned, it's a clothing retailer. So, fashion, isn't that a risk here?
It is. Their whole thing is fast fashion, is to take it from catwalk into the online site as quickly as possible. And I'm not saying that's a new model. That's, others have done it. Inditex do it. ASOS tries to do it. But what they try to do is, what they specialized in the past, the management, was providing other retailers with fast fashion, and they realized that they could, frankly, sell it themselves. So they are experts at getting, or so they tell me, at getting the inventory made and sold. 71% of their supplies come from the UK, mm-hmm. and a large portion of that 71%, that's a 50%, so call it a third of everything they get is actually made in the UK. That means lead times are much shorter.
All right, Alan, you convinced me. I love the company. Valuation's low, because this is my problem. It's my problem with AO World is investors just have so few companies who are pure online retail stocks to invest in that they just pile in whatever the multiple. Right. So my last question here is, how is the valuation looking? Is it absolutely crazy?
Okay, there is relative craziness and absolute craziness, and I think we're in a relative craziness market. Let's put it this way: it's less expensive than ASOS, which is a darling for the market. It has been. It's done extremely well since IPO. The valuation looks like it's going to come in probably forward in the sort of 25 times EV/EBITDA for next year, February 2015. Excuse me. And that 42 is roughly where ASOS is, right? So I think that's going to attract some investors who are willing to take a chance on this smaller retailer.
Okay, from AO to Boohoo. Hopefully we'll get some better company names soon. Thank you, Alan.